Welcome back, guys.
Welcome back.
Welcome back to our YouTube channel. Today we can finally start what we wanted to do with the FUNDEDNEXT prop firm challenge. Okay, so today we can see a recap of the last few days. So we're gonna show everything as we said: stop loss, break even, and TP, because we want to be very transparent to show you, of course, how everything works. Okay, by the way, let's start immediately. Okay, we start the challenge on Tuesday 11, okay, 11 of March 2025. And we start with GBP USD. Okay, it was a Tuesday, and we got already our first TP. This was almost a 1 to 6. Okay, remember all our trades that we take, we enter with 0.25%. Just to give you a bit of knowledge about this trade, okay, the first thing immediately that you can see are these equal over here, right? This equal eye over here indicates a zone of support and resistance, okay? Then we saw this as our possible inducement to trade away, right? Where, as you can see, we got our classic continuation model with this build up in Asia, very clean. Okay, that already tells you, okay, listen, I want to go up. In fact, look at here what happened, right? You already know. You already know what is this, a clear trap. All right, very nice and clean. Identify that, we identify we're trading away from here. We react from this zone that, of course, it's clear. You already know what is it, right? It's a clear trap. Why? Because of that, all of that liquidity that we have up here. Okay, and we identify our entry. Okay, I will not enter exactly how, but it was a clean and clear entry to the long side. Okay, so passing to the next day.
Alright guys, the next day was also very simple in terms of price action delivery. In fact, we have this beautiful inducement here. As you can see on the previous day, we have this beautiful equal here. We have our inducement of all of this zone, and then so we recognize that we are going up and trading away from this zone here. Unfortunately, we are not able to enter in the market because we are out in the morning, so we wait until price take out also this equalize over here, and as you can see, same price action also these days. So equalize, price do what, fake the reaction on this clear SMT, okay, and also we have a little bit breakout structure to the downside, so this false reaction give us more liquidity up here, clear inducement with the news. Unfortunately, we are not able to enter here because of the news, but we wait our clear entry in this area. Very simple target here because it was the most recent point of liquidity of the day, so we take out this low, and in fact price what did go to the upside again. So this was a clear 1 to 5, very simple also trade. This day unfortunately we took also a loss, if I don't remember wrong, on Euro USD. So let's go on Euro USD. Yeah, this loss here on EU. This was a bad trade because we saw this type of price action that was like to GU. Okay, so we have this equal, this mini false reaction, we have this inducement, so we are trading away from this area, but we also are reacting from a clear SMT, so we are trading in line with an SMT. So this is why this was a risky trade, and we want to target this area, okay, because for now this was not a good zone to potentially take a short. so we wanted to trade into the inducement, not away. So this is why also this is not our A plus setup. It's a risky trade, but we were starting profit during the week, so we decided to take the risk and enter in this trade also because we have potential build up in the morning, potential inducement. So yeah, it's not our A plus setup, but we decided to also take this trade. Unfortunately, it's a loss, but you know, guys, 1 to 5 loss, so we were up of the day of 1.4.
Yeah, of course, trading into the inducement is more aggressive, it's more riskier, so also depends how your style is, right? How your style of trading is, okay? So going on to the next and last day, that was Thursday, so yesterday actually, all right, we got a win, a break even, and likely another stop loss on you that we will show you later on. Okay, but let's talk about GU first. Okay, so we already know everything about here. Okay, but going to the next day, all right, you can see how we got an inducement here. Okay, with this week. Okay, and you can exactly see how the price just went into this inducement. Okay, on the M1, I can show you even better. Just 1 second. Yeah, as you can see, this was the full candle. All right, so this was possibly the full point. Okay, of interest for the price. The price reacted from there. Okay, it create our big liquidity to the downside. In fact, we have our classic model here, pack inducement to the upside, very clear traps here to the downside, another clear trap here. Okay, so what happened? The price it tap in to the trap that was also possible to trade. Okay, going to the upside, taking out then the final liquidity, right? Because we created liquidity over here. This price took out some liquidity here, so it was kind of relevant. So of course you could have taken the long here, you could have taken the short here, okay? But we optimized for the short after taking all this liquidity. Was very clear, okay? Of course, rejection, huge week, so of course you will not put the stop loss up here, right? It will not make any sense, okay? But anyways, we took it. I think, yeah, it was around 1 to 4, something like that. TP at the first liquidity over here.
Yeah,
Okay.
and also, guys, if you see, it's exactly the same of the previous day. Look at this. Look at that. Week took out all the liquidity. Week took out all the liquidity, and then we enter in the trade. It's exactly the same fucking scenario. Crazy.
Yeah, yeah, yeah. Very excited when you say it. But it's true because the market moves like the same thing every single time. You know what I mean? Then we took a break even here. Okay, it was a continuation model, nothing special. The price one give a reaction, just came back down and hit the break even zone, but that's fine. And then let's pass to the last trade of the same day, but on a different pair.
Yeah, guys. The same on you to this week is not good you, but it's the same every single day. Is not perfect, but what we have on you, unfortunately, we want again as the previous day trade into the inducement. This is why most of our stop loss is because we want to trade against the liquidity. So it's risky, but of course it's part of the game. We have these beautiful equal highs on euro, and also what we have this liquidity. Okay, unfortunately didn't make a new high, so the relevant of this point is not so good. But what price did, took this liquidity here, give a reaction, leave equal, push down with more speed and momentum, and then what we have, another retest of this area, crazy retest. Okay, leave a support area, push down, create a false breakout structure for us. So we decide to enter in this area. Unfortunately, price just decided to push down again and leave all of this liquidity. So as you can see, guys, it's the same. Now here we want to trade against against liquidity, so into the inducement. Here the same, we want to trade against the liquidity into the inducement. We accepted the losses also because we are in profit during this week. So trading is like that. Sometimes you have to take risk because no risks, no money.
Okay, guys, so here we are on the FUNDEDNEXT account. Okay, as you can see, this is our challenge. We are up basically 4%. Okay, and make sure to go down below on the description because there you will have access to our link to access the FUNDEDNEXT prop firms. Okay, where you will have a 115% reward on your funded accounts.
Yeah, exactly. And as you can see, as Alessia said, for up 4%, we decided to take this prop firm slow, so we risk less because we want to take more trades on this prop firm so we can show you more TPs and also more stop losses. So maybe you can learn something from us.
Exactly, exactly. It's important for you this type of videos so that you can grow and understand also, how to manage these prop firms. Okay.
Yeah, guys. Normally we don't use this percent on the phase of prop firms. We decide to go risky, so up to 1.5% because for us time is more important than the real price of the challenge. So we prefer to go more risky and potentially lose the challenge, but for us is more important, as I said, time. Okay, be funded as most as quick we can.
Yeah, because it's like a risk to reward. I think you guys know what we mean. But anyways, I believe that's all for today. Everything should be clear. I hope you guys enjoyed the video. Again, in the link in the description, sorry, you will find all the links for everything if you want to go and have a look. And yeah, I suggest you to subscribe if you're not, to leave a like, comment, and I'll see you guys to the next.
Peace
And love.